All right, guys, welcome back to the channel. Today has been one of those days. One of those days where you look at the charts, you see everything crashing at once, and you have that split second of, whoa, what the hell just happened? Bitcoin suddenly drops, Ethereum suddenly drops, and XRP suddenly drops. The whole market took a little dive off a cliff. And immediately, TikTok, YouTube, Twitter, they're full of people screaming, that's it, the market's dead. This is the end. This is 2022 all over again. But do not panic. I like facts, I like research, and I like actual analysis. So I dug in. I spent time looking through the charts, and I did the analysis for you. Because once you understand how crypto actually works behind the scenes, it starts to make sense. And that's what I'm going to break down in this video for you today. Exactly why this mini crash happened, what the real cause was, and what I believe happens next. And the key point, it wasn't caused by anything big. It wasn't caused by any regulations. It wasn't caused by a hack. It wasn't caused by bad fundamentals. This was a structural failure, pure and simple. Let's get into it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
So first things first, let's talk about what actually went down, because the numbers paint a very clear picture. The first thing that's happened is the entire crypto market cap dropped to under 3 trillion US dollars. This is a big one. When total market cap falls that sharply, it tells you something very important. Liquidity has dried up. And in crypto, liquidity is everything. Liquidity is the buyers. Liquidity is the sellers. It's the volume on the order books. It's the thickness of the market that allows big moves to happen without causing chaos. When liquidity falls, the whole market becomes fragile. And even a little push can cause an avalanche. The second thing that I noticed was Bitcoin dropped to around $85,500. This was a sharp and sudden drop, not the slow grinding movement that comes from a big fundamental change. This was violent, fast and mechanical. Exactly the type of movement you see when leverage starts collapsing. The market didn't decide to sell, it was forced to sell. The third thing is Ethereum dropped to around $2,800. Ethereum followed the exact same pattern. Fast drop, no news, no warning, no chain specific reasons. Just liquidity falling out from under itself and the liquidation algorithms doing the rest. And fourth is XRP dropped to around $2.01. And it's the same story again. When three completely separate assets with different ecosystems, different use cases, different investor groups all drop in the same pattern at the same time, in the same way, that's textbook liquidation cascade. Nearly 400 million in long positions were liquidated. This is the heart of the entire crash. People were over leveraged again, as they always are. This is why I preach to you guys. Low leverage is the way forward. It is the safest way. Any tiny dip triggers liquidation waves. That wave forces selling. That selling pushes prices lower. Lower prices trigger more liquidations, and eventually the entire market is cascading uncontrollably. It's a domino effect that crypto traders have seen hundreds of times before. So why isn't this a fundamental crash? Now here's where my own analysis comes in, because you have to understand the difference between a fundamental crash and a structural liquidation crash. This was absolutely a structural liquidation crash. It's not even in question. There was no major negative news, no hacks. Well, there was one small hack over the weekend, but honestly, that isn't this. There was no bankruptcy, no exchange failure, no regulatory bombshell, no macroeconomic shocks. Nothing happened, except the market was stretched too thin. If this were a fundamental crash, you would be seeing things like this. Different coins reacting differently, smaller caps collapsing harder, sector-specific coins getting hit, on-chain activity dropping, institutional wallets moving, negative headlines everywhere. And instead, we've seen this. Bitcoin, Ethereum, XRP all dumped exactly in the same straight line pattern. And it wasn't just them, the entire market mirrored it. This is the signature of thin liquidity plus high leverage equals cascade event. Nothing more, nothing less. Let me explain this in a simple way that everybody, even the beginners, can understand. Crypto has two modes. The first mode is high liquidity, a thick market and stable moves. This is where institutions are active, when volume is high, when there's depth in both sides of the order book and price moves smoothly. Mode 2 is thin liquidity, overloaded leverage and fragile market. This is when retail traders are over leveraged, order books are thin, open interest is sky high, liquidity providers are scaled back, and whales can move markets with small amounts. When crypto is in mode 2, which it is right now, even a small downward push triggers liquidations for selling. More liquidations, massive selling pressure, full-blown cascade. Today was that exact setup. The market was spread thin. People were greedily in longs with too high a leverage, and funding rates were stretched. The books were fragile. So the moment price slipped slightly, the entire leverage side of the market collapsed in on itself. That's all that it was. Now that we know what caused today's crash, let's talk about what this means moving forward, because the implications are very different depending on whether a crash is fundamental or mechanical. Liquidation crashes historically tend to recover faster, reverse more cleanly, leave the market healthier afterwards, and remove dangerous leverage from the system. And here's why. When you flush out leverage, you flush out risk. When you get rid of the gamblers, you reset the funding rates. You clean the order books, you rebuild liquidity, you remove artificial upward pressure, and you allow price to move more naturally again. This is why liquidation-driven crashes often snap back. Not into bull runs, but into stability. There's nothing backwards about this kind of crash. It's normal, it's healthy, it's cleansing. It doesn't mean the bull run is over. It doesn't mean we're going back to 2022. And it doesn't mean institutions are running away. This was simply the system cleaning itself. If we zoom out and look at historical patterns, here's what actually happens after events like this. Liquidity comes back once global trading opens. Normal buyers return, order books fill back up, and bid walls reappear. Then prices often retrace upwards. Not always massively, but liquidation crashes almost always overshoot the downside. And panic sellers regret it. The emotional traders that dumped at the bottom, then watch the bounce happen without them. It's just human psychology. They will buy back in. They always do. They sell the bottom and they buy higher because they're emotional traders. The market becomes more stable, and this part is critical. Every time leverage flushes out, the next market move becomes more stable and more reliable. We're not in a crash caused by fundamentals. We're in a mini crash caused by mechanics. And mechanics can recover, and they usually do. Before we continue, a quick reminder, if you're holding crypto long term and you still keep it on an exchange, you are gambling with your future. Exchanges get hacked, exchanges collapse, exchanges freeze withdrawals. FTX proved that, Celsius proved that, Mt. Gox proved that. If your crypto isn't on a cold wallet, it's not actually yours. The cold wallet I personally use is Tangem, and you can get a 10% off with the link that's in the description of this video. It's cheap, it's secure, and it's what I trust for my long-term holdings. There's a link in the description. Grab yourself that 10% off. And if all of this volatility is stressing you out and you want to actually learn proper strategy, not gambling, not hype, I've created a full crypto course called the Crypto Liftoff Course. It is 100% free. There's no catch, and it teaches the exact strategies I use to survive multiple bear markets and bull markets. The link is also in the description. So yeah, that's the real reason behind today's crash. Not fear, not regulation, not disaster, just leverage unwinding and thin liquidity. Stay calm, stay educated, and don't fall for the panic. If you've got value from this breakdown, make sure you subscribe, like the video, and drop me a comment down below. It helps me more than you will ever know. Thanks for getting all the way to the end of this video, and I appreciate every single one of you. And remember this, the strength of the wolf is in the pack.